Live from Singapore, now on BBC News Business Today.
Markets across the globe slide amid escalating tariff threats from President Trump over Greenland. Netflix hits a subscriber milestone and sweetens its offer for Warner Bros. Discovery, but investors remain nervous with the stock slipping 5%. Hello and welcome to Business Today. I'm Vandhna Bhan. We begin in the US, where Wall Street saw its worst day since October last year as investors react to US President Trump's tariff escalations over Greenland. The Dow Jones index slipped more than 870 points, down nearly 2%. It was a similar picture for the S&P 500 and tech-heavy Nasdaq, with both indexes slipping over 2%. Tech stocks like Amazon, Tesla and Nvidia all tumbled, wiping billions of dollars off their market value. Now, Netflix was hoping to reset the mood with a strong set of numbers and a new milestone of over 325 million global paid subscribers. But investors seemed uncertain about the outlook for the company, with shares falling 5% in after-hours trading. It's been a bit of a bumpy ride for Netflix over the past 3 months, with the stock down over 20% since October. Their deal with Warner Bros. Discovery hasn't done much for the stock. In fact, shares have fallen nearly 15% since the merger was announced back in December. Netflix has since updated its offer for Warner Bros. And says it will pay completely in cash. I spoke with Paul Erickson, Principal Analyst, Media and Entertainment at Omdia, who explained what's got investors so nervous when it comes to Netflix.
I think their fundamentals are strong, right? So they had 8% subscriber growth. They had double-digit revenue growth as a company, and also in every single region they had double-digit revenue growth. So I think the mistake here would be to look purely at the stock price, because they have a record of firmly investing in the future and looking at their long-term growth and fundamentals and investing in those for the path that they see, regardless of any short-term reactionary movement in the stock price. So I think that it's overall a positive report from them. We have their subscribers up, we have revenues up, we have ad revenue projected to nearly double next year from $1.5 to $3 billion. You have a very diversified, very stable business on the basis of the fundamentals. So I think that the momentary stock price rising or falling, you have to look past that. I think it's a very strong company and very strong quarterly report from them.
I mean, with the stock prices down, what are investors concerned about here in terms of the Warner Brothers deal, and what would that mean for Netflix?
Right. Well, along with the Warner Brothers deal, there's the content spending that they have on the slate and what they've been spending on live events, and now you add to this the acquisition or potential acquisition of Warner Brothers. So I think it gives the financial sector a bit of pause, them looking at the variability of this deal. But again, I think that potentially down the road, should this deal come to fruition, you're looking at them bolstering an already strong content portfolio with all of the storied Warner Brothers IP, right? And also adding on to their portfolio a theatrical business which they plan to sustain in a very healthy way. So I think should the deal come to fruition, and it looks, chances are good that it will, you're looking at an even more diversified content portfolio, which helps strengthen their position as a global super streamer and one of those must-have subscriptions, right? If you're going to boil down your subscription budget to only a few companies, they want to be number one.
In other news, billionaire Elon Musk has picked a fight with the owner of the successful Irish budget airline, Ryanair, over the possible use of Mr. Musk's Starlink satellite services on their planes. The airline's boss, Michael O'Leary, doesn't want them, arguing the aerial antenna would drag on the aircraft. Mr. Musk first fired back a series of combative tweets and then asked his followers whether he should buy Ryanair. Mr. O'Leary says he'll address what he called Mr. Musk's Twitter tantrum at a news conference on Wednesday. Snapchat's parent company Snap has settled a social media addiction lawsuit days before the case was due to go to trial in Los Angeles. The plaintiff, a 19-year-old woman, had alleged that the algorithmic design of Snapchat and other social media platforms had left her addicted and affected her mental health. The terms of the deal were not given by lawyers at the hearing in California. Gold climbed to another record high on Tuesday, scaling the unprecedented $4,700 an ounce milestone. The surge comes amid escalating geopolitical tensions between Europe and the US, which have boosted demand for the tradition safety plays. Silver as well broke above $95 for the first time ever. Precious metals are seen as safer assets to hold in times of uncertainty, and the prices of both gold and silver have soared over the past year. Now, some breaking news just out. Japan's Nara District Court hands a life sentence to Tetsuya Yamagami for 2022 murder of former Prime Minister Shinzo Abe, according to NHK. We'll have more on that story here on the BBC News in later hours. Now, President Trump is heading to the World Economic Forum in Davos, where he's set to address delegates on Wednesday. His Treasury Secretary Scott Bessent was in town yesterday, urging world leaders and business executives to keep calm on Greenland. Our economics editor Faisal Islam has been speaking to Michael Froman, a former US trade representative during the Obama presidency, who said Bessent's advice not to panic was probably a good starting point.
The president oftentimes goes out in an unconventional way, but there's often a nugget of truth or value underneath that one has to take seriously. So with regard to Greenland, as an example, I'm not sure the U.S. needs to buy it or own it or invade it, but the issue of Arctic security is serious, and hopefully we can find a way between the United States and NATO and Europe and, of course, the Greenlanders to address the legitimate security concerns that are raised without raising questions around sovereignty. I think the harder issue right now is not to fixate on the tariffs or on the February 1st deadline, but to focus on where is a landing zone? What is a possible Venn diagram between what the president is focused on and what Europe is willing to do? And I think that right now the key is, can Europe show fortitude and unity without escalating in such a way that it leads to, a more serious conflict?
Put simply, in a nutshell, the rest of the world, this way of doing business, this way of doing diplomacy, this way of running the world economy, it's not going to change.
Not going to change in the short run. I think the rest of the world is adjusting.
We better get used to it.
They're getting used to it, and they're trying to figure out how to ensure that they're serving their own national interests, but within a new paradigm. We have a new form of globalism. It's globalism with Trumpian characteristics, and we can see it in one institution after another, in one forum after another, including here at Davos.
And what would you expect from the president in his speech?
Well, the speech itself is allegedly going to talk about a number of domestic issues, including affordability and housing. The question is, what does he say when he's not on script, and what does he say in the side meetings? And I think he'll be coming here, ready to engage with the rest of the world on this whole array of issues, whether it's Greenland, Ukraine, the Middle East, etc. And he has a pretty robust agenda for a president that was once feared to be an isolationist. Well, this is the most involved, engaged president in some time.
Well, the spirit of dialogue, that dialogue's been pretty spiky the past few days.
Well, we've gone from a Davos that used to be about improving the state of the world to one that's about the spirit of dialogue. I think the dialogue is largely between the rest of the world and the United States.
China's President Xi Jinping says domestic demand must remain the main economic driving force of economic growth. China managed to achieve its growth target of 5% in 2025, with exports helping offset weak consumer demand and pressure of US tariffs. I spoke to Han Lin from the Asia Group about the challenges China is still facing.
The headline growth number looks reassuring, but it does mask a two-speed economy. So, for example, manufacturing and exports are stabilizing, helped by policy support, but the domestic demand, especially the consumer confidence and property, still remains a bit weak. So in short, I'd say China is growing, but not quite in the way that feels strong to the households or small businesses.
What would you say that means long-term for China then?
Well, one of the questions is are we in a temporary dip or in more of a structural transition? And I'd say that as China is looking at its economy, it's moving from a property investment-led model to one driven a bit more by advanced manufacturing, technology, and exports. So this transition inevitably means a slower, a bit more uneven growth, and there's more pressure on jobs and local governments along the way. But I think overall, compared to rumors that maybe China's economy is looking really weak going forward, I'd say China's economy is really more in a recalibration that's a little bit messy, but still there's a path forward.
China's economy has been quite resilient so far to this trade spat with the US. How are tensions there shaping China's economic outlook?
It's a good question. So these tensions going on, they're reshaping but not stopping China's economic growth. So China is losing access to advanced technology, certain Western markets, but it is responding by doubling down on self-reliance and expanding trade with the global South. So the result is not really decoupling. It's a bit more of a fragmentation where you're seeing different rules, different supply chains, but it is translating to potentially higher costs for everyone.
That's it from this edition of Business Today and us in Singapore.